2017 may end up being a year where predictable policies turned unpredictable and seemingly unpredictable policies end up being completely predictable. Let me explain what I mean. We're standing here awaiting the next monetary policy review from the Monetary Policy Committee today, and the outcome is supposed to be fairly predictable. Most economists are expecting that the Reserve Bank of India will keep the repo rate unchanged at 6.25%. They'll also hold on to their neutral stance on monetary policy. They may, however, adjust their tone a little bit and try and sound a little bit softer on inflation, because inflation numbers have come in below what the RBI had expected, and growth numbers have also softened a little bit more than what the RBI had suggested. But the unpredictable part of all of this is the backdrop. There are too many unanswered questions which the RBI needs to try and answer. One is, are we actually overestimating inflation? Remember, this time around, they've seen a couple of surprising developments. Firstly, food inflation has stayed in check, even though summer months tend to see a spike in food prices. That hasn't happened, leading to the question whether food disinflation is more structural in nature than earlier assumed. If so, what are the implications for headline inflation? Could we meet the RBI's 4% medium-term target a little bit sooner than earlier expected? And if so, that would leave room for the RBI perhaps to cut rates one last time in August. That's what some people in the market seem to believe. Equally unpredictable is the growth scenario. The latest round of growth data that we received suggested that growth in the economy had started to slow all the way from the start of fiscal 2017, and demonetization took it down another notch. How quickly does it rebound for demonetization, and what level does it stabilize at? Those are some of the growth questions, and all of that will be crucial inputs into how the RBI guides on its monetary policy. Remember, from the start of this year, we've had a series of surprises, or at least the market has had a series of surprises. First, in the February policy, the RBI abruptly changed its stance from accommodative to neutral. Then in the April policy, they hiked the reverse repo rate to try and ensure that easy liquidity conditions don't pull down market rates well below policy rates. So the market is actually bracing for more surprises, even though the headline outcome is supposed to be fairly predictable in terms of no rate cut from the Reserve Bank of India.